Hey everyone, good morning. Me, Kevin here. Citibank and Goldman Sachs have a couple of warnings that are going to be worth paying attention to. Obviously, I am going to give you a breakdown of these warnings and ILL give you my opinion on what it actually means and what matters here and what doesn't, T. So let's get started. The first thing that I find that is very interesting, and I actually think this is an accurate concern to pay attention to, is that as the long end weakness gathers steam seemingly driven by a reconsideration of inflation risks amid sticky data and a stalemate on the US-Iran front, the USD is rallying as a result. Okay, something to note. The USD is pretty much flat year over year, so I wouldn't necessarily call it rallying, but it is coming up off of lower levels. What that typically means is when we have a strong dollar, when we have companies that are selling goods and services outside of the United States, when they bring those back for earnings, sometimes you could see that FX impact and companies will actually miss on earnings because of that. So a company like Apple sells a ton of product outside of the United States, so sometimes that stronger dollar can actually hurt, which is one of the reasons we've historically seen Donald Trump prefer a weaker dollar because it incentivizes international companies buying from US companies, something to pay attention to. This is sort of an interesting note, but there are also some technical warnings here. They talk about Applied Materials had a significant earnings beat, but it did not drive a strong post-market rally. And this is a telling sign that indicates signs of tech fatigue are emerging. Sentiment indicators are flashing red with overbought conditions, flashing as well as our sales trader warning that we should officially trigger the oversold trigger. Just sounds like they re-saying the same thing over and over again. And if we do, then we could see a painful rotation. And this was an interesting line. They said software could be due a squeeze. I don't write like that. They do. Software could be due a squeeze, but it is interesting, and I am not pointing that out because personally I've been saying, hey, beginning of April hardware rally, we called it up front. Next is a software rally, so I kind of hope I am right because I want to be right on that. Obviously, I take egg on my face if I am wrong that a software rally is coming, but I didn't purposefully pick this out because of that. I just think it is interesting that they essentially saying, which is a tool for you to look at what happened with Applied Materials. Could that be a little bit of a leading indicator that maybe tech is kind of at that like extreme level now where we might be due for consolidation? It is also worth noting that the Cerberus IPO this week I think is really worth watching because I think you had a lot of YOLO going and FOMO going into that IPO, and it is basically, since it was priced at IPO, it has basically been straight down. And I wouldn't be surprised if that keeps going down, especially since, remember, watch my Cerberus IPO video, I break this whole thing down. But the only reason they re-gap probe Fitable is because of a change in the valuation of warrants. Otherwise, this is a money-losing company. So they literally going to go from, wow, we remaking all this money to, oh wow, we losing all this money. So that could create some problems for that stock. And then, of course, the broader tech sector. Now, my thesis has been that the SpaceX IPO is really going to drive hardware spending because SpaceX is going to raise $80 billion. Honestly, they probably raise like $100 billion. It be like 2 times the Saudi Aramco IPO, which Elon Musk has this obsession with comparing himself with Saudi Aramco for some reason. But what we're seeing is that now BlackRock is talking about investing billions of dollars into the SpaceX IPO. Whether they trying to secure an allocation right before the IPO or ADPO is not entirely clear, probably trying to get it right before. But I think what is happening is you have a lot of institutions that are like, all right, we pretty much certain this puppy is going to get included in the indices. So we either going to get our exposure later or we going to get our exposure up front. I am a little worried that things are getting a little overheated with the SpaceX IPO, but hey, I could see the enthusiasm. And I will say there is a massive, massive shortage for actual hard data centers right now, which interestingly, SpaceX might be able to turn xAI into a profitable data center leasing company, essentially given that massive deal they just struck with Anthropic, which is brilliant, absolutely brilliant strategy. And I think that was smart because really what we want is to see SpaceX succeed because it is really going to prop up the whole market, props up hardware, remarket. And that money, I think, eventually transitions to the other sectors, the finance stocks that are lagging, the software stocks that are lagging, and so on. Okay, so that the SpaceX IPO, by the way, was also set for, I think it is the second week of next month, which will be quite interesting. So we about a month away from that SpaceX IPO. Let us get back to some of these notes, though. A test of Liberation Day highs on the 10 and 30s, so Treasury yields. Now, the 30-year breaking, obviously 5%, and the 10-year yields breaking over about 4.6, that 4.57 to 4.6 level. They say this could challenge the equity market rally. So obviously something else to pay attention to as we dealing with more information coming out. That basically nothing happened out of the China trade deal or the China visit, which I hate to say it. I didn't want to sound pessimistic, and I said this last week. I am like people said, Kevin, what do you think is going to happen with this China deal? I go, honestly, nothing. This China trip is going to happen and nothing's going to come of it because I personally think Xi Jinping has more leverage over the United States right now because the United States has kind of gotten itself into a quagmire with Iran. This morning, we heard that the United States demanded 5 things from Iran. Give up uranium, no concessions on helping them rebuild, open the Strait of Hormuz, not support the Hezbollah militants in Lebanon, Lebanon, and the United States would only be willing to unfreeze less than 1/4 of Iranian assets seized, which is kind of exactly what Iran's like. F you, like. What are you giving us if you are not going to give us our seized assets back, and we have to give up our uranium, and you are not going to help us rebuild, which are essentially clear conditions that they've had from day one? Of course, we question how much bargaining power they have, which all comes down into the Strait of Hormuz. Clearly, they have some, especially now that there is talk that Iran is going to deploy deep-sea subs in the Strait of Hormuz to make it even harder. We not getting anywhere here? I mean, just this morning we had a UAE nuclear power plant hit by a drone. Now, fortunately, the nuclear facility was hit. It was actually an electrical generator that was hit, and there were no injuries reported associated with this attack, but it just shows you that there is a frustrating lack of progress with Iran. China kind of threw its hands up. We got fewer Boeing orders than we were hoping. We didn't really get any kind of like major announcement out of, oh, maybe we get FSD approval. Oh, we get like an NVIDIA chip sale, given that we haven't sold a single H200 to China. Maybe we actually make some progress. Nothing. We got like a downsized Boeing deal that tanked Boeing stock, so very little progress in China. And I think it was really because Winnie the Pooh, Xi Jinping thinks he is got the cards. In fact, Donald Trump has sanctions on Iranian tankers going to China that Chinese shipping companies that are extracting that oil are supposed to pay. And they let some of these ships through the Strait of Hormuz blockade to go to China, and they supposed to pay their tariffs. And Xi Jinping literally told those Chinese companies, do not pay the tariffs. And Donald Trump's like, well, we going to make a decision in the next coming days. We probably just undo that extra tariff. So in other words, we going to paper hand on that as well. It is crazy. So let's go to the Goldman piece. The Goldman piece, which is interesting as well. Short note over here. So that was the Citi piece, some Iran commentary. The Goldman piece was the following. Here was a little note. Anthropic had agreed to $30 billion. Oh, that is okay. This is new note here. Anthropic just raised money at a $900 billion valuation. They raised $30 billion, which that is hard cash that they could use to pay for data centers at SpaceX. Making that XAI division profitable helps boost the SpaceX IPO. Pumps that SpaceX IPO even more, which creates more of a wealth effect for this full software AI cycle. It is all going to go to crap one day in the future, we know, but we just trying to watch for the early warning signs. Rabobank had a really good piece on this where they breaking down that a lot of chip components like GPUs, some even server racks are booked out 26 to 52 weeks. So you can get some of the water cooling components that you need for actually placing data centers in service for 26 to 52 weeks because a lot of the stuff is booked out. So really, if we want to see that turning point in data centers and sort of this cyclical spend of this next AI bubble or whatever we want to call it, we can look at the next 12-month out earnings and the forecast, which so far they still holding up. So far all is still good. Obviously, there is some reason to be nervous. Watch that Cerberus IPO. I think it is a little bit of a testing sort of warning ground for SpaceX as well, though. Cerberus, I think, is a kind of a pump and dump. Watch my full video on that. You can always join us as well over at mekevin.com. We got a Memorial Day coupon going on over there. And this is interesting. So Goldman says the following. There's clear sort of momentum chase that is being highly concentrated in everything AI. And what people are doing is they reselling their losers. They rebuying winners on leverage. Leverage is accelerating and rinse and repeat. And even though the tape still has bad breath, the market is officially getting away from a lot of the bears sitting on the sidelines, which is why I call this. This is going to be the most frustrating rally. Most frustrating rally at the beginning of April. We said it. People are going to be pissed. They going to be bearish on the sidelines. They going to miss the rally, and then they going to fall in at the worst time. It is typically how it happens. And even if you miss the hardware rally, that doesn't mean you shouldn't be looking for opportunities in, software or other sides, because in my opinion, those are next. There are great deals out there on amazing companies. Anyway, it is hard because when you look at the index levels, it doesn't feel like there are great deals. It feels like everything as top of the market, but that is not true. So what we do in our course member live streams, for example, is every day we pick a company, sometimes two, and we granularly go through one at a time and we look at the fundamentals and we were like, is this a good deal right now or not? Okay. Or at what price is it a good deal? Like last October, we like Robinhood 16. This is crazy. This is worth maybe $69 at a fair price. Well, that is where it sits today. So, sometimes talking about how something is too expensive can actually save you a lot of money. But anyway, Goldman here says it is tempting, but Don T fight this move higher. In other words, Don T try to short this move higher. I actually agree with that. I think it is kind of dangerous to try to push puts right now. There is actually a whole Bank of America thing where they retalking, I think this was in the Financial Times this morning, where they retalking about structuring creative put options to essentially help people reset higher. So that way you have a put for when the market does fall, but it resets higher with less of a loss. They just rolling your options is what I think is happening here to give you an option for downside protection, but without making you feel as bad that you are missing out on the rally. And to me, it is just a sign that the market makers want more money. The more options exist, especially arcane and low-rated options, the more the market makers are making bank. They love this volatility and they love all this creative crap anyway. Dips have been extremely shallow, and that is because the long-only community has been and will continue to be ready to pounce as buyers. We are sitting at the worst market breadth since late 2022. Retail activity has inflected higher retail trading. Volumes have risen 28% since mid-April. Not a surprise that they were a little late, and the recent replacement of the pattern day trader rules with less stringent margin requirements increases the likelihood that retail trading activity will actually rise further, right? No more of that 25K limit. I am like 1 minute from done. Do you guys have a good ride, huh? Oh, I'll help you find it in just a sec. Give me 1 minute to finish here. All right, so then they just came out of their ride. How was it? What? Little Mermaid thumbs up? Did Ella like it? Can Ella come say hi? All right, so then we got Infotech total exposure. We resitting at the highest tech exposure since January of 2024. Come here, Ella. Can you come say hi to the camera? Come here, buddy. Come say hi, say hello. Are you nervous? You don't like the camera. You don't like it. This is Ella. She is our largest 2-year-old. She is like the size of a 3-year-old, and she is the first one we re-experimenting going to Disney with. And she has been an angel. She has been so fantastic. It actually makes us think we could take more of the little ones. Honestly, these guys are harder. These guys are a lot harder. Yeah, do a wheelie. Oh, dear Lord. Okay. Then we got Infotech as total exposure for gross exposure and net exposure. We are at like all-time freaking highs on tech exposure. You see that right now? See, I kind of drew this little red line over here. Crazy exposures right now. And then among companies that have reported results, CapEx grew 38% during Q1 2026, while buybacks grew just 1%. Despite muted buyback growth, we continue to see very healthy, consistent executions on a corporate repurchase desk. But keep a close eye on this. In other words, if you actually look at like Meta and Google, stock repurchases have plummeted because they re-spending it all on CapEx. The companies that are still repurchasing their own stock, software companies, but everybody else like the hardware spenders, they not doing buybacks anymore. And that is usually a big support for the market. And so when that support goes away, you know, a lot of people wonder, okay, well, when those employees that work there get their shares and then they crack the egg because they want to go buy a boat or whatever, or something stupid, then you only have downward pressure. So it is pretty common to see that when buybacks dry up, the market starts getting a little softer. I think this market, you know, I am still bullish on the overall economy. I know that there are underlying issues. We've talked about them regularly. None of this really affects the bull-bear scale. I think bottom line here is expect more volatility. I think the Cerebras IPO is going down. I think hardware, even if it takes a breather, it still has legs through at least the SpaceX IPO, maybe even a month after that. And then we're going to start transitioning probably in July, August, my crystal ball says, towards some more software interest. So anyway, there you have a little update for us, and happy Sunday. Good luck this week. We LL have a lot more content. If you don't get it all, if you are not getting all the notifications because YouTube isn't sending them, which they will do. So if you feel like you are missing videos, download the Meet Kevin app. You can actually customize your preferences for notifications. So you can say, Kevin, I only want your stock and econ videos. I only want your Fed videos, like I don't want your pilot or life update videos or whatever. That is fine. You can customize that. Now I got to go deal with this family dynamic. I'll see you later.